morning, this is Kim, and today I want to talk with you about corporate stock valuation. As we move on past bonds, it's now time to look up different stocks, particularly looking at their financial information and make decisions about whether or not we purchase or pass on a particular stock. So for today, I'm going to do a quick evaluation here of two stocks that I'm interested in purchasing. The first one being Visa and the second one being Mastercard. Now you notice I'm using a worksheet, and this worksheet is in your weekly folder. It's called Stock Evaluation, and that's what you'll be using this week also. Also on this side, I've gone to finance.yahoo.com, and in the search box I'm going to type in or start typing in Visa, and then it'll pop up with a list, and I'll see that Visa is right here, and I'll go ahead and click on that. And I will do the same for Mastercard after I finish the evaluation for Visa. So Mastercard should be significantly faster. All right, this evaluation makes the assumption that you have already listened to the quantitative analysis notes video that's included in your weekly folder. So I hope you have, because in that video I explain several of these factors in detail. So right now I'm not going to go in the detailed explanation. Instead, I'm going to show you where to find these on this website. So here we go. I'm at Visa right now. And when you go in first, it automatically lands you on the summary tab for Visa. So the first thing we see is a price chart, and it's a good way to start. Let's look at a price chart. So over time, this is the max price chart. So for as long as Visa has been a public company, it looks to me as if the price has consistently gone up over time to where we are today. I mean, we see, of course, regular ups and downs in the market. That's typical. We understand that as a class. But we can see a good picture of how Visa has performed over time. Now, historical performance is not necessarily an indication of what will happen in the future, but it gives us some signals as to what type of company Visa has been. Okay, moving down from that and over to my sheet, the first thing I want to note on here is, well, what is Visa? A business summary. And I don't need to look that up particularly. I do know that it's part of credit. So I'm going to call it credit. It's a credit card company. And similarly, Mastercard would be the same. There we go. Now, aside from that, it asks a few details which we can pick up right from this page, right from the home page here. It says, what is the symbol of Visa? And that symbol is located right here. So the symbol is V. And then next it asks us for the current price. And I can see the current price right here. It's $82.76. And finally, it asks me for exchange traded. And right underneath the Visa name, I can see that it is traded on the New York Stock Exchange. Right there. Now, also, you'll note here that I have put S, S, and S. That S stands for summary, S for summary. So I want to give you some clues as to where to find the information on Yahoo, which is why I'll tell you what these abbreviations mean. So S is for summary, and P, as you can guess, is for profile. So if I click in profile here for P, I will see that it has it tells me the industry, which I'm going to need for later. It's credit services. Sector is financial, of course. It's headquartered in San Francisco. Here's some of the key employees. And then lastly, there's a big description of Visa, which I don't need that big descriptions. I just know for in general terms, it's a credit card company. Okay, so now I'm moving on, and the next financial indicator I'm going to be looking for is yearly revenue. And again, I want to look at yearly revenue because I personally want to buy a company that is growing over time. So if the revenue had been declining over the last several years, I might be concerned that is not a company I want to put my money into unless they've spun off part of their industry or there's been a significant change to justify a decline in revenue. So here it says F. If you go over to here, F, I'm going to go to financials. And here they are. We have the income statement here, the cash flow statement, which we're not going to be using for this, and then the balance sheet. And now we are familiar with the balance sheet because we did a personal balance sheet for ourselves. So we can expect to see assets and liabilities on the balance sheet. And then on the income statement, right off the bat, we see revenue here. And the line I'm interested in is total revenue. So I'm going to go across here and I'm going to note that revenue on an income statement is reported in reverse order. So we have 2013, 2014, and 2015. Top line, I see that it's gone from 11.7 to 12.7 to 13.8. So that is on a upward trajectory. I could calculate the growth rate each year, but for our purposes, I just want you to note the pattern over time, and then also let's start collecting the numbers. So I just want to copy these if I can. Actually, let's go right here. 3 years ago is 11778. I'm recognizing that these are in thousands of dollars, and then it went to 12,702. And then last year it was 13,880. So good, that's good. Visa is a growing company, at least as indicated by their revenues. All right, PE ratio. Again, this was explained in quantitative analysis notes, but what we're looking for is it's effectively how much you're going to pay for every dollar of earnings that this company makes. How much are we willing to pay? That's the PE ratio. So if I go here, it's on the area called ST. So ST is statistics. And statistics is a major hub of information for our stock evaluations. So let's take a second and look through that. In this area, we have, again, it has just filled with an overwhelming amount of numbers, many of which we are not using. But let's just kind of organize it. So for valuation measures, how we're valuing the company, we see PE right here. We know we're going to use that in our valuation. Over here in trading information, they have beta, which is another valuation measure we're going to use. Also 52-week change. So there's a couple things we're going to pick up on this side. And then moving down, we have, again, some other return on equity that's in your quantitative analysis notes. And dividends, we're going to pick those up. And finally, we're going to pick up some information on debt and cash, something we want to look at, and the book value per share. So this becomes an important page for us to understand when we do stock evaluation. So I'm going to scroll right back up here to the top, and I'm going to go ahead and pick up the trailing PE. Forward PE would be an estimate. We're not sure about that estimate, so we're going to go with the trailing PE ratio and put in here that it is, I'm going to round here, 35. It's just a number. So for every, there's a 35 for every dollar of earnings with Visa, I'm going to pay a premium of $35. So $35 for every dollar of earnings. Just want you to keep that in mind. Okay, next is competitor PE. Well, in here, the competitor I selected was Mastercard. And I want to find out how it compares to Mastercard. Now, I could type in Mastercard. I could go through the same function, but instead, there's a letter in here that says I, an I. And if you look at the comment next to this, you will see next to here that there is a website that I've asked you to go to for I industry information. So it's biz.yahoo. You're going to have to copy that and paste it in a browser. Now I've already done that. So over on my side, I have this area. I'm going to go back one. This is all Yahoo on Yahoo's website. This is the industry center. This is what it is. So this is where I can pick up different informations on companies that compete directly with each other. So I learned from the profile that Visa is in the industry or the sector called credit services. So I'm going to scroll down here and I'm going to go to credit services. Now, if I wasn't sure, I could type in Visa and do view industry. Well, that didn't, oh, Yahoo, something is wrong with that. So we'll do it the long form. Anyway, I'm in credit services right now. I want to make sure that Mastercard and Visa are in here. So I'm going to scroll down. Sorry to scroll on you. Here's a bunch of Visa, so that's right. And I'm probably going to see Mastercard, and I do. And let's look for through a few others. I'm probably going to see Discover, and I'm probably going to see American Express. So all of these are in this category. So what can I find out? Well, here's the PE ratio of all the different companies that fall into the credit services category. So I can see American Express right here. Here's their stock symbol, and it has a PE ratio of 11. So that's significantly lower. So for every dollar of earnings for American Express, you're paying a premium of $11. Next, but I'm not looking at American Express, I'm looking at Mastercard. So I'm going to go down here to Mastercard, and again I'm looking for their stock. So the stock symbols only have letters. They don't have any of these periods and extensions or anything like that. It's just the letters. So Mastercard's ticker symbol is MA, and if I scroll over here, here's the PE ratio right here. Can't see from the header, but that's where it is, and it is 30. So I'm going to go ahead and put 30 in here. And then lastly, I want to know what the PE ratio is for the industry as a whole, credit services. And I can see right here, industry, the PE ratio is 18.6. So I'm going to put here 18.6. And again, Mastercard is 30. Now, just looking at that, the PE ratio, I'm going to pay $35 premium at Visa. I'm going to pay $30 for every dollar of earnings at Mastercard. But the industry as a whole, if you take all the companies in the aggregate, I'm really only going to pay $18 for every dollar of earnings. So here's what that might suggest, that Visa and maybe even Mastercard are overpriced. That means that they may not be worth $35 for every dollar of earnings, and it may not be worth $30 because the industry is sitting around 18.6. So that's just worth noting, that both of these may be overpriced, or on the flip side, maybe they don't have enough earnings to support that current price level. So let's look at the rest of the factors and see what's going on with these companies. Okay, now we're going back to our regular Yahoo page and we're looking for book value. So again, book value, assets minus liabilities. It's going to be information that's on the balance sheet. So I'm back in my statistics, and I'm looking in balance sheet, and I can see that my book value is $11.47. So I'm going to put here $11.47. That's assets minus liabilities divided by the number of shares outstanding. That's where it sits. So we want this to be high. I would assume we want a high book value. Again, we'd like to see our PE low, and we have two inflated values for Visa and Mastercard. Next, return on equity. This again is explained in your quantitative notes, and it's located also here in statistics, right up here under management effectiveness. And return on equity for Visa is 18.13, which is is good. We always want a return on equity at a minimum over 10%. And how much money are owners of the stock receiving on equity owned by the company? Okay, next we're going to look at cash and debt. I like to see how leveraged a company is. In other words, I'm going to scroll down here because that is going to be on the balance sheet again. So in my opinion, companies that carry a significant amount of debt have greater difficulty when the economy isn't doing so well. Now, that being said, there are some industries that lend themselves to a significant amount of debt. So I always want to look at kind of what the industry is doing as well. So here, I see that the total debt carried by Visa is 15 billion, almost 16 billion dollars, and the total cash they would have to cover that debt is half. It's half, 8.75 billion dollars. So I like to make a note. I want to see how this compares to Mastercard and maybe even the industry. But I'm going to start with Mastercard first. So instead of doing a ratio, I'm not going to make it more difficult. I just ask you to put total cash to total debt. So this is 8.75 and 15.88. So about half amount of debt can be covered with the cash they own. Okay, and then we'll get to Mastercard in a little bit. So again, could they pay off all their debt if they had to? No, they couldn't because they don't have enough cash. All right, next, earnings per share. Is the company at the end of the day making money on a per share basis? And we can go right here to earnings per share and see that it's $2.35. $2.35 is where Visa is right now, and then we'll see how Mastercard is doing. Divs. Okay, well, it does look like Visa is paying a dividend. So again, these are forward, not happening yet. We're going to look at trailing dividends. And the first thing I see is the dividend is right here. This is, even though it says rate, this is actually a dollar amount. So it's going to be 56 cents. And then since dividends are also in another place right here, dividend yield, which is going to be right below, is 0.68%. So I'm going to put 0.68% here, not 60. Let's try that, 6.8%. Actually, that's too high. It's 0.68. So I should, there we go. So I had to change it to a decimal first to fit in here, but that's what it is. So it's not a significantly high dividend yield. At least they have a dividend yield, but it's pretty low. Dividend yield is, of course, the dividend divided by their price. And it could be because their price is overvalued. Okay, the next thing I see in here, again, both of these are on statistics, so I'm in the right location. I'm going to go up and I'm going to look at volatility or beta. And again, I explained beta in quantitative analysis. Basically, in summary, the market beta is 1. The beta for Visa here is 1.14, so it is slightly more risky than the market. Not a lot, it's just 1.14. So there's Visa. And lastly, I want the 52-week change. So 52 weeks on a rolling year, how much has the stock price of Visa changed in the last 52 weeks? And it's right here, again on the statistics page, and it's up 14.72%. Pretty high. Look at what the S&P Standard & Poor's, our major index of 500 stocks across all industries. The S&P is only up 8.76%. So Visa effectively has outperformed the market by a significant margin over the last 52 weeks. Not might necessarily be the same over time, but over the last year it has. Okay, and then lastly, there's a section here called current headlines, and this is where you need to go out to the web and look for very current news on Visa. Or you could go to their most recent annual report, which is online, and you could look up the letter to shareholders and see what the CEO has to say about Visa. They're generally going to talk about, or he or she is generally going to talk about what happened last year, and then they're going to give you an indication as to what's going to happen moving forward. But it is a good source of information. It might shed some light on how Visa will remain competitive in the market, or if they're going to plan any significant changes. So now remember, we have some other credit types of companies moving in and could take over. I mean, we could have PayPal really grow into something spectacular. So it's always good to read about these and to really understand what's going on in the industry of credit services. Okay, so now I'm going to pop over here to Mastercard and do the same thing. So here I'm going to go start typing in Mastercard. There it is. Symbol is MA. Start on the summary page over here. Let's go MA. And its price is a little bit higher. And it is also traded right here on the New York Stock Exchange. There we go. And I just want to take a look. Let's see what's happening. There's Microsoft's, or there's Mastercard's growth chart. Also, trajectory is up over time. So just think if you had invested in Mastercard and even after the recession, you would have made some significant money over time. Now the real question is, where is it going to go moving forward? And that's why we want to take a look at their patterns over time and also follow it up with some qualitative information in terms of how competitive are they in the market, where are they going in the future, how are they going to attack all the little companies that are coming out trying to work on credit services. Okay, so I'm moving off of that, and the next thing I want to go to is the revenue categories. And I see the F, which means financials, so it's going to be right here. And I'm on the income statement looking at total revenue, and once again, 8.3, 9.4, not as significant as a jump between 2014 and 2015, but still on an upward trajectory. So again, I'm going to go here 3 years ago, and next. So again, this extends through 2015. We don't have current information. We could find more current information. Again, you want to do some research. We don't want to sink our money into companies that are not going to be successful in the future. So it's important that we get the financial picture along with their competitive picture and their company direction. Okay, the PE ratio, I had it was 30 on here, but I know if I go to statistics right here, I can verify that. And the trailing PE is 29.89, so 30 is just fine. I'm going to go ahead and pick up some more information. I know that the competitor, you could say that Visa was a competitor of Mastercard, and its PE ratio is 35. And again, the industry as a whole is 18.6. Book value, again, I'm on statistics. I can scroll down to the balance sheet category right here and get the book value per share, which is 5.32, $5.32. So it's worth half as much as a Visa, but also Visa is a significantly larger company. Return on equity, back up here, 61.91%. 61.91%. Significantly higher than Visa. Total cash to total debt. Let's see what's going on here. Ooh, total debt here. 50, I don't know if that's billion. That might be millions of dollars because I think it's going to be significant. Oh, here's total debt. Sorry. 3.31, and look at the cash. It's completely the opposite of Visa. So instead, their cash amount is 6.45 to 3.31. So in terms of a cash position, Microsoft, or I don't know why I keep saying Microsoft, Mastercard is in a significantly better position cash-wise. They have plenty of cash to cover all of their debt, which to me would be a positive. So I want to keep that in mind. Earnings per share, right here, $3.41. Again, much higher than Visa. Dividends, let's see what's going on over here with dividends. Trailing dividend rate, 73 cents. And yield, this is a dividend expressed as a percent, 0.72%. Putting that in the wrong category, so let me move it here. Okay, next, let's find the 52-week change, which is going to be up here at the top. 52-week change is 8%. And again, it did not beat the S&P 500 over the same 52-week period. So the market returned 8.76, and again, Mastercard returned only 8%. And by the way, here's my beta, 1.43. So what does that tell you about the risk of Mastercard compared to Visa? It means that Mastercard is more risky. So when the market is up, in theory, Mastercard should be up even more. But when the market is down, the same thing would apply. Mastercard would be down more. Let's see if we filled everything out here. Okay, I'm going to open this up full screen and we're going to talk about this. So here we have two credit card companies, Visa and Mastercard. Both are growing. Visa looks to be growing at a faster clip, but anyway, both are growing. PE ratio, again, we want low. So right here, Mastercard is lower. Next, industry book value, we want higher. Over here, Visa is higher. Return on equity, we want high. They're both above 10%, which is good. But again, Mastercard, significantly higher. Total cash to total debt, Mastercard, looking significantly stronger. Earnings per share, Mastercard, looking significantly stronger. Dividends, Mastercard, higher. Volatility, if we wanted to reduce our risk, we would be looking at Visa. Total return, Visa. And lastly, the dividend yield again would be higher for Mastercard. So check this out. In terms of what the fundamentals are that we're looking for, some are better on Visa and some are better on Mastercard. But let me talk about what bothers me. Well, first of all, yes, Visa has a strong growth rate, but again, in my opinion, because of this PE ratio, really doesn't have the profits or the earnings per share to support this high of a price. So I'm thinking maybe Visa's looking a little overvalued, but I'm starting to feel that way about Mastercard too. I'm not overjoyed with either one of these companies at this point. Yes, they've had good runs over time, but if I really wanted a company in the credit services industry, I might look for something else. I really want to look for something that's undervalued, where it has room to grow in price. So I wouldn't stay right here. I might take a look at American Express or some of the new companies. So again, if I pop back in here and I go to the industry and I start looking at what's available on this, again, I'm kind of interested in looking at seeing what PayPal's doing. So maybe I'm going to go look at PayPal and see what's up in terms of their PE, types of them. I could also check out American Express up here. There's American Express. You know, its PE is only at 11.29, so it's lower than the industry. But again, I want to check on some other factors. So I'm going to do, I guess my bottom line is I'm going to do some more research here. There's not anything obvious that stands out that said, yes, Mastercard is a good investment. I think they both might be a little overpriced right now. And that would be my conclusion. So when I go down here and I say my stock price summary, I'm going to write in here. You know, Visa PE is too high compared to competitors and industry. Also, debt to cash is 2 to 1, indicating significant debt compared to Mastercard. You know, total return looks strong, but again, stock is overpriced. Okay? That's what I want to see. I want you to talk about these. Then when you go to Mastercard, you want to pick up the fact that its beta is significantly higher than the market. So there's lots to report on. And again, you may have a different opinion when you do these. You may say, oh yeah, this really stands out as a great buy. But I don't, and that's okay. So I want you're going to look at 3 different companies for this week. You're going to fill out a summary for each one. And then we're going to try to find as a class what really stood out. You're not going to do Mastercard or Visa. You're going to do some other companies. So what did you find? I'm really curious. Maybe someone will do Nike and Under Armour and another sporting goods company, maybe Dick's Sporting Goods. It'll be interesting to see where we can find some undervalued companies that present good buying opportunities for us. Okay, so that's all I have for today. Good luck with this week's homework, and I'll talk to you soon.